Let's talk about the dollar because it's at an 8-week high. And that's as the market has been reassessing what the Federal Reserve is likely to do and whether it's likely to cut interest rates. Well, it all started with Jerome Powell's press conference on Wednesday evening when he said that it would not be appropriate to cut rates until there was greater confidence that inflation is moving to 2%. After the Fed press conference, the target rate probability of a rate cut in March has fallen to 35.5%. Well, the probability fell further after Friday's job report. A quick reminder, the US economy created 333,000 jobs in January. Expectations were for 180,000 job creations. The unemployment rate, meanwhile, remained at 3.7%. Expectations were for it to rise to 3.8%, and average hourly earnings rose as well, more than anticipated, by 0.6% month over month and 4.5% year over year. Well, a Jerome Powell interview with CBS News show 60 Minutes aired on Sunday night shut the door as well on a rate cut even more, where he said it was unlikely that the Fed will have the confidence to cut rates at the next Fed meeting. Well, the CME Tool Watch is now pricing a 17.5% chance of a March rate cut. The odds for a cut in May have lengthened to 58.5%. Now, if we have a quick look at the euro US dollar price chart this morning, well, it's currently flat there, down 0.09% at the moment. And the demand for the pair, the US dollar has prevailed the last few days, but the euro US dollar ended a third consecutive week with losses. The pair, as you can see, currently lower, euro being impacted by macro woes as well. And if we have a quick look at the US dollar Japanese yen price chart, well, that is up just marginally there. You can see 0.01%. The yen has recovered a bit after the Bank of Japan's hawkish tilt, saying that conditions for phasing out huge stimulus and pulling short-term rates out of negative territory are falling into place for the US dollar. Analysts say growing acceptance, of course, that the Fed will keep rates higher for longer remain supportive of a further rise in the US Treasury bond yields and could act as a tailwind for the dollar. And if we have a quick look at the price of gold as well this morning, well, unsurprisingly, that is down 0.51%, currently still above the $2,000 level. On reduced bets, down on reduced bets for aggressive Fed easing as well, lifts the US dollar in turn is seen as a key factor undermining the yellow metal.